Okay, let's unpack this. $1 trillion.
Yeah,
It sounds like something straight out of a sci-fi novel, doesn't it?
it really does.
But we're talking about a very real, potentially very controversial, and frankly, utterly fascinating potential pay package for Elon Musk at Tesla.
Hmm.
How does a figure like that even, come about, and what does it actually mean for the company, shareholders, the future of tech?
Well, what's really fascinating here, I think, is that this isn't just some random huge number. It's more like a blueprint for Tesla's next decade.
The blueprint, okay.
Yeah, we'll be connecting the dots between this unprecedented executive compensation plan and a really bold vision. Tesla wants to redefine transportation, sure, but also AI, robotics, energy, the whole lot.
Right.
So our mission today is really to cut through the headlines, give you a clear, informed understanding of what's really at stake, and maybe offer some surprising insights, too.
Exactly, and that's a crucial distinction. You've shared some incredible sources with us. These detailed proxy statements, the official docs for shareholder votes.
Right, the nitty-gritty.
And news analysis, Tesla's own quarterly reports, they really help connect those dots. So together we'll explore how this trillion-dollar potential is tied to some truly audacious goals. How shareholders weigh in, what it all says about corporate leadership, innovation. I think as we unpack this, you'll find some genuinely surprising insights. Stuff that maybe redefines what we thought we knew.
Definitely.
Okay, so first, let's tackle that headline number, that trillion-dollar pay package. It grabs attention, obviously.
Instantly?
But what exactly is this compensation? Is it like a guaranteed payout?
Yeah, that's a really important question. Is it guarantees?
Right.
And the sources make it abundantly clear. Absolutely not.
Okay.
This proposed plan is designed very specifically as pay for performance, not pay for promises.
Pay for performance.
Right. Musk gets no cash, no traditional bonuses. It's all stock awards. And they're granted in phases only if Tesla hits these extremely aggressive targets over 10 years.
10 years.
Yeah, think of it like a series of 12 distinct tranches or milestones. Each one has its own conditions.
So it's basically a massive incentive program then. What happens if the company doesn't hit these targets? I mean, for Musk, obviously, but maybe more importantly for the shareholders who bought into this vision.
Well, simply put, if there are no results, there are no payouts. That's the core idea.
Okay.
And there's data to back this up. An analysis by Infinite Equity showed that Tesla's CEO compensation growth from 2018 to 2022, which was way up there, 100 percentile,
Yeah.
it directly mirrored Tesla's shareholder return performance, also 100 percentile.
Wow.
So it suggests a really clear alignment. Incentives matched value creation. In fact, the compensation actually paid to Musk during that earlier period, when you factor invested in outstanding equity, it totaled over $51 billion. That really shows the direct link.
Okay, that's a key point for you, our listener. Understanding this isn't just handed over. It's deeply, intimately tied to the company's success. But what are these ambitious targets? How do you even set goals for a $1 trillion package?
The conditions are exceptionally rigorous. Each tranche, each step, requires hitting both a market capitalization milestone and a certain number of operational milestones.
Both. Okay.
Both. And once a milestone is hit, it's considered forever deemed achieved for the future tranches. So it creates this progressive ladder of success. Each step builds on the last one.
Let's dive into those milestones then, because the numbers and ambitions here are, they're truly astounding. What are the market cap targets Tesla's aiming for?
Okay. The first market cap target is a staggering $2 trillion.
$2 trillion.
$2 trillion.
Yeah.
To put that in perspective, Tesla would need to nearly double its current valuation and likely expand way beyond just EVs, maybe into energy storage, AI,
Right.
dominate those markets too.
Right.
From there, they escalate. Increments of $500 billion or $1 trillion, aiming for a colossal $8.5 trillion.
$8.5 trillion.
Yeah. Our sources note this would be like twice the current highest valuation of a company like NVIDIA.
Wow.
It signals a future where Tesla isn't just a car maker, but maybe the most valuable tech and AI platform on the planet. And these aren't just quick spikes in value. They require sustained market cap over both a 6-calendar-month and a 30-calendar day trailing average.
So long-term sustained growth, not just a flash in the pan.
Exactly. It shows a demand for real, lasting value. This isn't just growth. It's a complete reimagining of what a company can be.
Yeah.
That's a significant aha moment right there, I think.
Yeah, $8.5 trillion is truly mind-boggling. But beyond market value, you mentioned operational milestones. How do these product goals specifically lay out Tesla's long-term vision? How revolutionary are they compared to, say, traditional car companies?
Oh, they're definitely revolutionary. These product goals are deeply woven into Musk's Master Plan Part 4, which envisions sustainable abundance. They show how Tesla plans to expand beyond just EVs into this broader ecosystem: AI, robotics, energy. There are 4 key product goals, and each one really pushes the boundaries.
Okay, what are they?
First, 20 million Tesla vehicles delivered. That means scaling up massively from their current 8 million EVs.
20 million.
Yeah. The goal is to significantly grow adjusted EBITDA, that's a key profitability measure, and also build out the robotaxi network. And deliver here means when control transfers to a customer or when it's put into commercial operation as a robotaxi.
Okay, got it. What's next?
Second, 10 million active FSD subscriptions. Full self-driving.
The software side.
Exactly. This isn't just about selling cars, it's about monetizing the car's brain, turning software into this high-margin, recurring revenue stream. FSD aims for the car to navigate totally autonomously, which is a huge shift.
And we're seeing Tesla already?
Yeah, sources show FSD, supervised, being tested in big cities globally. Paris, London, Sydney, Rome. Broader releases depend on regulatory approval, like in China and Europe, possibly this year. And the tech behind FSD, also crucial for developing the bots.
Okay, so vehicles, FSD, what's third?
Third, 1 million robotaxis in commercial operation. This means a daily average of at least 1 million robotaxis running commercially over 3 months.
1 million robotaxis.
Yep. Tesla sees a big advantage here, faster, cheaper scaling than competitors like Waymo. Waymo was valued at $45 billion with only about 1,500 vehicles back in May 2025.
Right.
Tesla plans to leverage its huge existing fleet of FSD-equipped cars. No human drivers could mean much higher margins, maybe up to 50%, and lower rates than Uber or Lyft. The purpose-built Cybercab, for example, is slated for volume production in 2026.
Okay, that's a massive shift. And the last one.
And finally, 1 million bots delivered. We're talking humanoid robots like Optimus.
Optimus, right.
Leveraging Tesla's FSD AI and vision systems, the humanoid robot industry is projected to hit like $4.7 trillion in global sales by 2050. Musk himself has said Optimus could be the biggest product of all time by far.
10 times bigger than the next biggest product ever made. Wasn't that the quote?
That's the one. And a bot here is defined pretty broadly. Any robot or physical product with mobility using AI, like Optimus, but not vehicles. And delivered means when control transfers to a third party.
Okay, so if you kind of weave all these threads together, you see this integrated ecosystem, self-driving cars making money, AI robots changing labor, clean energy supporting it all.
Exactly.
That's a huge shift from just being a car company. It makes these massive performance targets make a lot more strategic sense, actually.
It does.
But okay, a pay package this big, it naturally invites intense scrutiny. So who's actually deciding all this? What's the role of the everyday shareholder in something this significant?
Right, this is where corporate governance really becomes central. The design of this 2025 CEO Performance Award wasn't quick. It involved a months-long process by a special committee of Tesla's board.
A special committee?
Yeah, and they didn't do it alone. They engaged a whole roster of independent experts, legal counsel, primary compensation advisors, equity specialists, accounting advisors, even a secondary compensation advisor.
Wow, a lot of advisors.
A lot. All brought in to ensure thoroughness, get market-based insights, provide independent advice. Dr. Shane Goodwin also advised on specific governance matters. It shows the depth of scrutiny they applied.
And what about the committee members themselves, their disinterestedness? That seems pretty critical for fairness, avoiding conflicts of interest.
Absolutely critical.
Yeah.
And they addressed it. Formal interviews were done with the committee members, Robin Denholm and Kathleen Wilson-Thompson, to confirm they were disinterested under Texas law, meaning neither director gets any direct benefit from this specific 2025 CEO award or the special share reserve. They don't have a material financial interest in this specific outcome. For example, Ms. Wilson-Thompson hasn't taken cash compensation since 2020 and even forfeited 36% of past equity awards.
Okay.
And Ms. Denholm, despite having significant wealth from vest equity, has also foregone new awards and cash retainers since 2020, forfeiting 40% of earlier awards. Their financial interests are aligned with general shareholder value, not this specific award.
Okay, so it's this complex dance, isn't it, between a powerful leader with a huge vision and the collective voice of shareholders. How does Tesla's overall corporate structure impact that shareholder voice, their influence?
That's an interesting point, especially since Tesla officially moved from being a Delaware corporation to a Texas one on June 13th, 2024.
Ah, the Texas move.
Right. That context matters because the current board is classified. Directors serve staggered 3-year terms and can only be removed for cause.
Which means,
Effectively, even if shareholders are really unhappy, it's very hard to quickly change the board's makeup or challenge management. It's not like a board where everyone's up for re-election every year.
right, more insulated.
Exactly. Proxy advisory firms like ISS and Glass Lewis often criticize this structure. They argue it reduces board accountability, makes it harder for shareholders to influence things quickly. Plus, currently, shareholders can't call special meetings or act by written consent, and many big bylaw changes need a supermajority, 66 and 2/3% vote.
But I thought there was some movement on that front, something that could give shareholders a bit more leverage.
Yes, there is. The board has committed to proposing amendments to get rid of those supermajority voting requirements if stockholder participation hits 65%.
And did it.
Well, voter turnout was an impressive 83% in 2024. So our sources indicate this change is expected at the upcoming 2025 meeting.
Okay, so that would give shareholders more power in future votes.
It would. However, Free Float Analytics still estimates Elon Musk holds something like 69% of board influence. They categorize the board type as totalitarian.
Oof, strong word.
It is. And they suggest annual elections would lead to a more democratic board. So it highlights this persistent tension in the structure, even with the potential voting change.
And beyond the structure itself, we also saw that shareholder proposal about political neutrality for the company, its leadership.
Well,
What was the board's take on that? It feels like asking a founder whose identity is so tied to the company to just compartmentalize their public voice.
yeah, it's a fascinating tension, exactly as you say. The proposal wanted to ban all political statements, endorsements, contributions by the company and its top officers, even using personal money.
Wow, even personal resources.
Even personal. The board, though, strongly opposed it. They argued it was overbroad, could have a chilling effect on free speech, and might even be impossible and unlawful to actually enforce.
Also,
They pointed out how vague political speech can be, the legal headaches of monitoring personal activities.
Yeah.
It could even violate state laws about employee political expression. So, yeah, the sources show a clear clash. Shareholder desire for a focused corporate identity versus board concerns about individual rights and just practical enforceability.
okay, so with all these complex ways to align Musk's incentives with long-term value, what happens after those incredibly difficult milestones are actually met? Are there safeguards, restrictions on the shares once they're earned?
Absolutely. That's a key part.
Yeah.
Any shares earned under this plan, yes, they come with voting rights, but they cannot be sold for 7.5 years.
7.5 years.
Correct. A long lockup period. Furthermore, any large-scale sales, even after that, require prior consultation with the board. That's to prevent any sudden volatile impact on the stock price.
Right.
So the whole structure is really designed to ensure a long-term alignment, keep Musk deeply invested in Tesla's future for years after the performance targets are hit, not just encourage short-term gains.
Okay, we've looked at the grand vision, the complex governance, but the real question is, where does Tesla stand today on this incredibly ambitious journey? Let's ground ourselves in their Q2 2025 update. What's the current pulse of the company?
Well, despite what they call a sustained, uncertain macroeconomic environment, shifting tariffs, fiscal policy, political stuff, Tesla is still making these high-value capital investments, R&D investments. They're maintaining a strong balance sheet.
And their priorities.
Still focused on delivering affordable and compelling autonomy-capable models, growing the energy business, and advancing robotics. The core vision remains.
Okay, and how are they doing on the vehicle front? Specifically thinking about those huge 20 million vehicle goals.
Right. So total vehicle production was pretty stable year over year in Q2 2025. Deliveries, though, saw a 13% decrease.
A decrease.
Yeah. But on the positive side, they did produce their 8 millionth vehicle overall in June. That's a huge milestone.
8 million, okay.
And they're expanding their offerings. An affordable model apparently began first builds in June 2025, with volume production planned for the second half of the year. They launched the long-range RWD Model Y in North America, starting under $45,000.
Yeah.
And the Model Y was introduced in India, third largest car market in the world.
Big move.
Big move. Plus, they're integrating AI agents into customer service to cut wait times. So, while these Q2 results show solid foundational growth, especially in new markets,
Yeah.
they also really highlight the scale of the climb ahead.
Yeah.
Getting to 20 million vehicles delivered. That needs not just steady improvement, but like exponential acceleration beyond current trends It really puts the audacity of these targets into perspective.
It really does. What about their energy business? That seems increasingly vital to their whole sustainable abundance vision.
Yeah, the energy business is doing very well. Tesla considers it more critical than ever.
Yeah.
They hit their 12th consecutive quarterly record for energy storage deployments, looking at the trailing 12 months.
12th consecutive record.
Okay. Yep. Lithium refining and cathode production plants are on track for U.S. domestic production starting in 2025. Their Megapack product. It's proving cost-competitive with fossil fuel generation when you pair it with solar PV, and it deploys 4 times faster.
Impressive.
And we're seeing the supercharging network grow too. Over 2,900 net new stalls added year over year, including the world's largest supercharger site in Lost Hills, California, which is interestingly powered by solar and Megapack itself.
Using their own tech.
Exactly.
Yeah.
So this energy segment clearly shows robust, accelerating growth. It's crucial to their bigger ecosystem strategy.
So looking ahead, how does all this tie into their financial outlook, especially for hitting those mind-boggling market cap targets?
Well, Tesla reports having enough liquidity to fund its product roadmap, its expansion plans. Their outlook points to a really interesting strategic shift. They expect, and I'm quoting here, hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits over time.
So software and services becoming more central.
Precisely. It reinforces the idea that those ambitious product goals we talked about, FSD subscriptions, robotaxis, bots, they aren't just side projects. They are absolutely central to their long-term financial strategy for hitting those multi-trillion-dollar valuations.
Yeah.
It's a fundamental rethinking of where the real value will come from.
Okay. So we've journeyed from that headline-grabbing trillion-dollar figure deep into the layers of performance metrics, shareholder stuff, Tesla's sprawling future vision. You can really see now this isn't just about the money, is it? It's about a company betting big on a truly transformative future with a clear, even if incredibly challenging, roadmap to get there.
Absolutely. And if we connect this to the bigger picture, it really illustrates a modern dilemma in corporate governance, doesn't it?
Yeah.
And executive compensation.
How so?
How do you properly incentivize a founder, someone with this singular, almost fantastical vision, to achieve unprecedented growth, while also protecting shareholder interests, maintaining fair, transparent processes?
Right, that's the balancing act.
It is. And this package, as audacious as it is, it attempts to do just that. Through really strict performance conditions, independent oversight, even if, as we discussed, the governance structure itself is still a point of debate for some.
Indeed. It's a fascinating case study, aligning leadership incentives with long-term, maybe even exponential value creation. And for you, our listener, hopefully understanding these nuances gives you a much deeper insight, way beyond the initial headlines, into the inner workings of one of the world's most talked about companies.
And it raises a really important question for you to think about. As these lines keep blurring between tech, automotive, energy, and as AI and robotics speed up, will these kinds of pay-for-performance models, like Tesla's, become the new standard? The way we incentivize leaders to drive truly revolutionary innovation? Or is this just a unique exception, tailored specifically to a unique leader and his very particular integrated ecosystem vision? What does this mean for how we define, how we value leadership in the companies of tomorrow?
Definitely something to mull over. We hope this deep dive has given you a really robust understanding of this complex topic and maybe some thought-provoking ideas to take with you.
Yeah.
Until next time, keep digging, keep questioning, and stay well informed.